Welcome to the Century 21 Leading Edge podcast, where our mission is to give back and provide value to the industry that has been so amazing to all of us. We do this by keeping realtors and the public up to date on what's going on in our industry, growing our collective knowledge as professionals, and most importantly, by giving realtors and brokers everywhere the tools necessary to bring their business to an unprecedented level. So welcome to the 20th Century 21 Leading Edge podcast. I'm Paul Barron. I'm the broker of record from Century 21 Leading Edge. And we have had a bunch of discussions in the past trying to figure out what's going to happen with regards to the mortgage industry, Bank of Canada, CMHC, and we have two distinguished experts in the field that are joining us tonight.
Where are they?
And
I was going to look behind me. I don't know. Are they over there?
Introduce Shubha and Kendall from CLC, and go ahead and tell us a little bit about yourself.
Well,
go ahead, Shubha.
I'm certainly not distinguished, and I'm anything but an expert, but my name is Shubha, so thank you, Paul, Tass, and Anthony. Shubha Dasgupta from Capital Lending Center. Been in the mortgage business for over a decade, and we work very closely with the Century 21 team. We're honored to be here.
Fantastic.
Yeah, maybe I'll take both, distinguished and an expert.
Definitely distinguished.
Yeah.
That's
maybe not an expert.
As long as we have one expert, we're good. We're good.
And these days we're talking about you can just be an expert on almost anything. So Kendall Marin from Capital Lending Center, and looking forward to our discussion tonight. It's going to be fun.
Fantastic.
Beautiful. And
Gentlemen?
I'm Tassis Giannakakis from Century 21 Leading Edge, and welcome, guys.
Thank you.
And Anthony Bungaro, Century 21 Leading Edge, and I'm looking forward to our discussions.
Yeah.
Perfect. So what we're going to do is we're going to start with wine, as
All right.
we always do with this. And because we have distinguished guests, we actually brought out the good stuff.
Oh, wow.
This time. So tonight we're doing an Italian tasting, and we have 4 wines from Italy. The first wine is the glass on your left, which is a Chianti Classico, and this is, and correct me if I say the grape incorrectly, Sangiovese?
Sangiovese.
Sangiovese is the grape variety in the first wine, and it's a Chianti, and we're going to give that one a try and see what you guys think of this. So what we do normally with the guests, so I told you the grape variety in that one, and then when we try the second wine, we're going to look for our guests to let us know what grape variety you think is in that second wine.
Perfect. I'm about to take my mic off and run out the
Perfect.
door.
Cotton candy. That's a grape variety, right?
That's great.
So, Paul, we were actually in Italy last year before the pandemic.
Yes.
In the Chianti region.
Oh, wow.
So we got to drink some Chianti from right there. It's a wonderful area, and the whole country obviously is beautiful.
Yeah.
We were in Italy as well last year.
Yeah.
Absolutely.
Yeah.
Yeah, so this is a
My sister speaks Italian as well.
2015 Chianti Classico. And what we're going to do is, just so that you guys can compare it to the first one, we're going to move in and try the second wine, which is the glass on your right. And I want you to tell me what grape variety you think is in that one.
Okay.
And we'll look for our expert Kendall.
Yeah.
Especially if they've been in Italy.
I'm going to say that it's not Sangiovese.
I'm going to second that, I think.
Yeah, so you guys would both be wrong, so very good.
We're off to a good start.
We're
Excellent.
distinguished.
I hope they know more about the mortgage business.
Yeah. Well, good luck with that one.
Anyway, I am teasing. I'm not really putting you guys on the spot for the grape varieties. So the second wine is, now if I had told you this, it's a Brunello di Montalcino.
You
guys
see,
know
you
you
see
went to
this?
Italy?
See what's happening
Yeah,
right
yeah.
now?
I mean-
So in Italy, there's pretty much Chianti,
Yeah.
Brunello,
Brunello.
Barolo,
Yeah.
and then Super Tuscan, right? So first two, Chianti, Brunello, those first two are both the Sangiovese grape, okay?
Excellent.
Very
But
interesting.
for the most part, a Brunello is a higher end wine. when you get the Brunellos, just from a better crop, better growing area, and usually a higher priced wine.
So I have a question for you.
Yes.
Do people actually favor and won't drink other styles of wine from other regions?
Sure, there is. I have obviously favorites, right? There's a Muratage that is made in South Africa.
Okay.
Right? And I took some wine courses, so we used to do blind tastings.
Okay.
You had to actually guess the grape, the age, and the region.
Oh, wow.
Now, the truth is that it was a multiple choice question. Okay. It's not like anybody, unless you're a sommelier that you can pick up wine.
Yeah.
Oh yeah, I think from the East Bank of the
2012.
Yeah, 2012. Yeah. So the idea is that if there's a dark U in the thing, that's older, right? So if one of them was younger and the other choice was an older wine, you can see that U. Okay, that's older. Some of them would give you a choice of white grapes, and it was red wine, right?
Oh, wow.
Now, what's also interesting with that is that all of the juice from wine is white.
Oh,
So they actually make, from the Pinot Noir grape, they make a white champagne from red grapes. You guys
Interesting.
Yeah.
Go figure.
Go figure. And that's why sometimes when you look at champagne, it says Blanc de Blanc, which is white from white.
right.
And then you have a lot of champagne that's made from the Pinot Noir grape, which is a red grape, but they just don't press the skins on it. So it's the skin that gives the color. And sometimes you have wine darker or lighter, and it's just how they press it as to whether or not that color is there.
Very interesting.
So I think that people in general, when I was talking about the South African wine, this is a wine that is very easy to identify in a blind tasting. It stinks like a barnyard. It smells like manure.
Really?
Right. Absolutely.
Wow.
Smells like manure, right? And they have a saying when a wine smells bad like that is that they hope that the taste doesn't follow the nose. Right? So it smells like manure, but it tastes great. Okay.
Yeah.
Love it.
So I guess there's a coffee bean that they go around and get the excrements from some animal and get the beans out of that, and that
Civet cats
okay.
in Africa.
There you go. In Africa too. Hey, what is it with the Africa and the stinky stinky wines
But
there?
the digestive system cleanses the ammonia from the beans, so it gives it a better more
flavor.
pure flavor.
Yeah. I tried it once. Have you ever tried it?
I have,
Yeah.
and I don't drink coffee, but I have. It's funny. I have a funny wine story for you, though. My wife and I, when we were dating, just before we got engaged, my brother had given us a gift certificate to go to a very wonderful restaurant in Toronto, Auberge de Pommier on Yonge Street.
Mm-hmm.
And my wife and I hadn't been out on a date in a long time. We were caring for our mother at the time. And he gives us this gift certificate and says, go have a great night. So here we are dating. We haven't been out in months. We've had a long couple months. And we go out to this beautiful restaurant with, this big gift certificate in hand. So order all kinds of wine, beautiful wine, expensive wine. Give us the best. And they have a sommelier there. So, you got to pretend you're on a date that you know about the wines.
Yes.
Swirling my glasses, the sommelier would come by. How's the wine, sir? Oh, it's fantastic. I didn't, this must come from the red grape variety. I was having great conversation. And a couple, maybe 15, 20 minutes into dinner, I see him standing at the corner of the room. And it's just, sir, is everything okay this evening? Absolutely. The wine's fantastic. Food is great. Company's even better. Would you mind, sir? And he grabs the glass from me and just gives it a little swirl. I'm going to get you another bottle. This bottle has actually turned. I can smell the sulfur from the other side of the room.
Did you say that? But that was some good sulfur, though.
Very good sulfur. Yeah. Very good sulfur.
Lovely grapes.
So I learned that sulfur is not a good smell in
not
wine.
a good smell in wine. Right? And Auberge de Pommier, great restaurant. very small little French dishes, but they have an amazing wine list. They also do corkage there, so
Yes.
it's a great restaurant to go to if you're bringing your own wine. We had one of our events where we opened a bottle and it was corked. It was very bad, and all of the agents said, "Can I try it?" I said, "Okay." So why? Why do you want to try it? Well, we want to see what.
wine tastes
I
like.
should now just say Shubha.
Still don't know the difference.
He'll be able to tell you. But this one was a wine that had like chunks in it. It was some serious problems.
Yeah.
So they wanted to try it though, just to see. And it's always good when you're on a date, Shubha.
Yeah.
Always send the first bottle back.
Yeah.
Right. It makes you look like you know what you're doing.
This isn't to my caliber, good sir.
Take a second out on the floor and then take it from there.
Well, at least Paul knows next time we're on the show, he's just going to feed us bad wine.
Bad wine. Chunky wine.
That's right.
Yeah.
And we'll move on to the other ones in a bit, but we'll go ahead and sip that. So let's talk a little bit about real estate.
Yeah.
So with our guests, we had a podcast, I guess, a few weeks back, and we were talking about the craziness that's going on with CMHC. I guess first talking about this prediction that the market is going to go down 12 to 18%. So can you guys give us your perspective on the author of that? I guess it's Evan, what's his last name?
Evan Siddle.
Evan Siddle.
Evan
yeah.
Siddle is the CEO of CMHC, which is Crown Corporation, one of the three main mortgage insurers here in Canada, and the only one owned by the federal government. So it's funded by taxpayer dollars. So we went to 0 to 100 real quick on this podcast.
Yeah.
We're going right to the good stuff here.
There you go. Yeah, we wanted to get into this. Yeah.
So there's been a lot of talk about CMHC in recent months, and that was back in April when CMHC put out a statement, and they were predicting at the time, if memory serves me correctly, 9 to 18% decrease in price value for GTA real estate, for real estate in general. Sorry, CMHC is a national organization. Over the course of the next few months, some other statements were made and some other things were said, and CMHC actually even got involved with making some pretty significant changes to the real estate market, specifically changing some of their qualifying criteria for the insured loans. So to answer your question first, Paul, in terms of the price reduction, I think, to first answer the question from the opinions of, on the mortgage side of the business, but mostly just from a real estate statement in general, I think it's almost irresponsible of any leadership in the industry to make crystal ball predictions.
Agreed.
And the reason why I say that, and I say it with great care, is because leadership has to be cautious because they drive the market. When people like Evan make statements, consumers listen. And when consumers have fear driven into their mind, it's a very dangerous situation. People run for the hills because they feel there's fire. And I think when experts talk, if you're not certain there's fire, then you can't say there's fire because people start running from it, right? So I kind of just wanted to start there.
And until they don't, right? So, the other component to this is that you cause some frenzy, you cause a little panic, and then people start saying, well, I don't know if I believe you. And you saw the market change, you saw the shift, and I think for us in the mortgage community, and I'm speaking for a lot of people, but I think when we look at our agents in general, there's a bit of a disappointment in terms of the rule changes and the line of thinking that CMHC took. I've got some personal, and I'll say personal, because I'll talk to some of my feelings about some of the disparities that their changes have caused for new buyers. We look at what's happened with the pandemic in terms of we're going to see an even greater disparity between wealth and not so wealthy. When you're looking at who are these, and Shubha, you can go into detail in terms of talking about the actual bureau requirements and what is needed for CMHC, which you can get from the other insurers. You can still go to another insurer. I think that it also creates an unfair playing ground, right? And maybe elaborate it. I know I cut into you, and I'll get back to what I was saying, but I'll elaborate after Shubha elaborates in terms of.
Well, I think, and I agree with you, and I agree from the standpoint of the industry and the professionals, us in the room here today. You know, you hear a statement that doesn't come true, and we've talked about this many times throughout our relationship. You know, you hear it once, you hear it twice, you hear it 3 times. Well, you know, it's like the old saying goes, right? You know, you fool me once, shame on you. Fool me twice, shame on me. That's for us who are in the industry. We live through this on a daily basis. I think the other side of the coin, and where I think it becomes dangerous, is for those that don't live in the industry, right?
That's right.
So, you know, they're still living in fool me once, right? We might be fool me twice, shame on me. But what about everybody else, the millions of Canadians that rely on this information and this education? So coming back to the statement though, Paul, and maybe you can kind of enlighten me as well on the statistics, because I know you're a good stats guy on real estate. I don't think they were far off at the time they made the statement of 9 to 12% or 9 to 18% decrease. I think in that month of April, in the early beginning of the pandemic, you know, if we looked at the month over month numbers, obviously, you know, given the fact that our country had just gone into a major lockdown, unlike that we've seen before, there was, you know, a decrease in prices in that moment in time. Now, I believe also that it corrected itself very quickly. And readjusted itself back to, you know, where it was.
So let me comment on that. Please. Because it's interesting. And the other question that I want you guys to think about while I'm answering this is, I guess Evan likened you guys to barbers, right?
Yeah.
So why should we listen to you on this?
Yeah.
I want you to.
I'm going to give you an even
why,
better
why
one
we
after.
Yeah. Did you guys know what I'm talking about? So I guess what Evan said in his report is, you know, he's representing you guys.
Absolutely.
And he's saying in his report, don't listen to mortgage brokers, because it's like asking your barber if you need a haircut, right? He's going to say, of course, right? Yeah. So I'll put that one to Kendall. see how he deals with it.
He's got nice hair too.
But
I always need a haircut. Thank you.
In terms of the market, right? So to say that he was right early on, I'll just give you the actual numbers. So just like in 2017, when we started the year, we had this steep increase in values, right? Prices went up drastically, 12% in 3 months.
Right.
And then we had the government intervention and the foreign buyer tax, and people's reaction to that was to step back, right? And it took a full year for those values to recover.
Yes.
If we look at December 2019, the average price was $838 in the GTA. And in January, February, it went from $838 to $910. So we started 2020 exactly the way we started 2017. And I was really nervous with that kind of a start, right? Because I think things were going to get out of control. So if you say there was a correction, right, I would challenge you to say, was it the false increase over those 2 months, or the fact that it dipped back down to 838 in April, only to rebound, back to 953 for August?
No, absolutely. And
right?
you know, where I think I'm definitely not defending the statement at all, just trying to confirm and validate the facts of, you know, what kind of happened in that time frame. I think the bigger issue at hand is the statement kind of dictated a time period, and it said 9 to 18 months over the next 12-month period.
Yeah.
And okay, you made the statement, can't take it back now, but today we see the prices have rebound, and today we see prices are increasing year over year.
And
so where is the opposite statement?
Right, but he also doubled down in June.
Yeah.
After the prices went up, he doubled down on that, that assessment.
Absolutely.
Right? You know, so I'll jump in on this. This is really interesting to me, because I think the challenge with his comments is there's a difference between understanding behavior or trying to understand behavior and trying to control how people behave.
Right.
And he wants people to behave in a certain manner. So he's not actually looking at a market and making predictions. He's saying, this is how you should behave in the real estate market. This is the way I look at his comments. Why do I say this? Because he also asked the other insurers to get on board with his line of thinking. And he condemned them for not being as stringent or as strict as he was. I'll liken his comments to an argument I got into with an appraiser. Really interesting thing. So we had a downturn. Maybe it was after two. I'm trying to remember the day, but we were back on an upswing. And we were discussing, and when I say arguing, we don't really argue, but disagreeing on an appraisal value. And I actually called him back because I got it reappraised and got it reappraised at $50,000 more. And he wanted to give me a speech about how this is ridiculous. This is ridiculous what's happening in the market. This is the way I liken this gentleman. This is ridiculous. This shouldn't happen. And my comment was, anything is worth what somebody wants to pay for it, right? That's really what it comes down to. So in context, I'm looking at when you compare the two behaviors, you have an appraiser saying that, well, you shouldn't spend that much on a home. Well, why not? That's what I want to spend on a home. That's exactly what he's doing. So he's not willing to listen to any expert who's on the grounds, boots on the ground. And fortunately for us, we get a lot of data, we get a lot of information from our agents. We were able to see that, and it's the comment I made earlier about what we really saw with the downturn, and not really much of a downturn, was job loss. Job loss impacted only a certain demographic. And out of that demographic, a lot of them weren't even homeowners, nor could they be homeowners, they were renters, right? So when the world started turning again, and everybody, after the fear-mongering, started saying, yeah, you know what, I'm gonna jump on this, it moves. And really, I look at his comments as, I'm trying to control everybody's behavior instead of trying to give a fair prediction on what's going to happen.
Right.
That's the way I look at what he's doing. And we know this because now you're saying to the other insurers, well, what you're doing is wrong. I remember back when the bidding wars were crazy. And Shubha was there, we were in a room and CMHC was speaking. And it's the same type of behavior, which is we want to tell the Canadian consumer how to behave in the real estate market. And it was an interesting argument because I actually answered this question because they were pretty much saying shame on you to the realtors. You guys are causing these bidding wars, you're a problem. So we were in the room and I said, well, can I just make a comment just to what you're saying? And I said, I used to agree with you, but I'm gonna tell you a story. I had a client and it was a bidding war. And they called me and said, it's $100,000 over. And I listened to your advice. And I said to them, don't do it, okay? And then you know what happened? He's like, what? 30 days later, it was worth $150,000 more. So I actually gave my client bad advice, right? And this is why I keep bringing it back to, if you want to pay for Louis Vuitton, you're going to pay for Louis Vuitton. That's really it. So when you ask about how do I feel about his comments, I feel he's trying to control behavior as opposed to looking at actually what is happening and reporting on it and making a fair assessment. And it's a very bold statement. It's a personal statement. I don't know how you feel about it because I can't speak for everybody. But if you're asking me what I think, that's what I think. And I think ego comes into play. And really you just got to know when to just look at just take a look, understand what's happening around you, and make your predictions based on behavior as opposed to telling somebody, this is going to happen because I'm telling you it's going to happen. Right? It's like those people who talk about their children. My child doesn't skip school. They have straight A's. Well, no, you don't really know what's going on. That's the way I look at these comments that they're coming out. I don't know.
Yeah, well, I mean,
is that too bold? I don't know. Is that too much?
I think it's a fair statement. Is it bold? Yeah, of course it's bold. I think anything that we're going to say to this to this situation is going to be bold, right? But listen, Evan is a highly educated person, and he holds a high position at a very big organization, right? Now that doesn't always tell us everything about it, but beside from what he talked about in terms of price decreases, Paul, he's actually done a few other things over the last couple of months, which we'll touch on. So that was a prediction he made in early April. In July, late June, July, CMHC made some changes to their qualifying procedures.
So what he tried to do is make his predictions come true by changing the rules. That's the way I look at it.
Yeah,
but,
we can certainly look at it that way, right? We can certainly look at it that way.
Maybe it wasn't so bold what I was saying earlier.
That's exactly what Kendall's saying.
And guess what happened? It didn't work.
Right.
Because there's two other insurers.
There's two other insurers.
Who now got shamed.
But that's not the only reason.
So talk about what the
Yes.
changes that he put in.
Yeah,
Shubha?
so they
'Cause-
made some changes in terms of, eligibility requirements, right? And we obviously don't have to go into specifics unless you guys would like to, but, minimum credit score requirements and debt servicing ratios and such, he wanted it a little bit stricter so that people were coming in more credible, more able to service the debt that they were about to take on. Now, one side of the fence that I do sit on and agree on is that Canadians do carry a large debt load today. So Canadians as a whole are carrying about 180% debt to every, $1.80 to about every dollar of income that they earn, right? So it's quite a substantially high percentage.
That's
of
a
debt
lot?
that we carry.
Well, just doing the math.
Paul's trying to figure out.
Paul, Tass is not even saying it. He's just like, yeah.
But yeah, I mean,
Sorry, Shubha, go ahead.
in terms of looking at it from a national perspective, but
Right.
what wasn't accounted for was the fact that the two private lenders don't agree, and more specifically, the industry doesn't agree to a whole, right? And this
Right.
I will say that I don't agree. We make a change of that magnitude, and a lot of things have to go into consideration. First thing that didn't go into consideration was the existing stress test. So right now, and for years, Canadians have been qualifying at a rate higher than debt. And I want you guys to keep in mind that the stress test was introduced in a time where interest rates were expected to be increasing. And for a short period, they were.
Right.
So
And that's why they brought it in, because
Yeah.
they said that if you renew and the rates are here,
Yeah.
you're going to be in trouble.
we want
right?
to protect Canadians against rising interest
Right.
rates.
But you never put in restrictions on borrowing when you're in a financial crisis or in a pandemic.
Financial
this is
crisis.
just the opposite to what is logical, no?
Absolutely.
and I-
Economic crisis, but more importantly, Paul, a declining rate environment.
Can I also put something crazy in there? I'm gonna come off like the nut job in this
You are, right?
session. That's true. I am a nut job.
That's-
But here, let's
That's what distinguished means.
Touted you as the expert. The experts are all not.
Fair enough. But let's look at something. Another thing that's really interesting. When that stress test came into play, it was Shubha. You know the stat on this. I find it very interesting that it was when it was the highest amount of renewals were coming due, ever. So think about this. Let's think about this from you're now a financial institution, and you have mortgages, and you make it very difficult for people to go find a better option. Just sort of happened at the same time.
Coincidence.
Stress test came into play right when it was what were you probably remember the
Yeah,
numbers.
absolutely. It was 51% of mortgages we're doing in the next 12 months. But, but again, that was, and I think we had this conversation actually on the last podcast.
We did. I
that
think we did
with you guys,
right?
right?
But it comes back to again, and this is where now that's power and be able to control behavior. There it is for real.
But and let's be fair, that wasn't Evan, right? So that was the regular.
That wasn't Evan. That
right?
wasn't Evan. No.
So, but today, Evan's ignoring the fact that, listen, we're going to make changes to how Canadians qualify, but we're not making a single statement towards a stress test. So stress test was introduced, and I'll give you guys some numbers on it. Stress test was introduced, and you guys know that it was the greater of the Bank of Canada benchmark rate or the contract rate plus 2%. That's what Canadians had to qualify at. So really the goal was that we want to see Canadians qualifying at about 2% more than what they're paying today. That's typically, the number falls somewhere in that range. Well, today, that number is almost 3% because we're in a declining rate environment.
Yes.
So we're seeing Canadians taking a 5-year fixed, 5-year variable. You can get deep discounts, 1.79, 1.75%.
Ridiculous.
And you're qualifying at 4.79,
4.79,
which is the Bank of Canada benchmark. So 3 points higher, 300 basis points higher. So that's number one that was disregarded in this challenge, right? And the challenge that I'm talking about, Paul, is that he actually wrote a letter to the financial institutions. And he wrote a letter, and you said he likened us to barbers. Well, he also said that he's looking out for the deep underbelly or the dark underbelly of our financial institutions, right? So also making a very bold statement to say that there's
Dark underbelly, that's nice.
Yeah.
dark underbelly were the exact words. Yeah, dark underbelly were the exact words. But what else was ignored on that? The fact that Canadians need housing. So by not allowing ownership, or by limiting ownership, or by hindering ownership, any way that we want to cut that pie, what are we doing? We're pushing people to rentals. So people still need home ownership. Now, debt servicing for a mortgage today is qualified at about 30-ish% of your income. And Paul, you might know the stat exactly on this. I'm not exactly familiar with the stat is, but the latest I've read is that renters are paying over 50% of their income. So renters are paying more than Canadians who are purchasing homes based on income ratios.
And then you look at that, and this is what it's, so now I'm going to circle back to what I was talking about with the disparities that were created. You look at a lot of these measures that were put in place, and again, my personal opinion, it has created an unfair playing field. What have we seen on the floor? We have seen first-time buyers. We have seen people that aren't investors, people that don't have the money. They've been knocked out, to Shubha's point. So now they got to go rent. They can't purchase. They can't own. We look at the beacon of 680 minimum, right? Somebody who is starting out has a smaller credit portfolio. What does that mean? If I am more established and I have a lot of credit and I have a blip on one, it's not going to impact me the same way as if I have 2 credit cards, right? So a lot of the first-time buyers are in a really rough spot. And
established credit, yeah.
And you look at, Shubha's talking about the 4.79, which finally enough went down to 4.79, but they're also qualifying on a 25-year AM, right? Because they don't have 20% to put down. Where essentially you can put more money down, but you can qualify over a larger amortization, which means you can borrow more money. So we are giving more money to those that maybe don't need to buy. And I'm not saying I have nothing against investors. Buy what you need to buy. We all do this here, but it is difficult for the first-time buyer, very difficult. And I don't think he's denting the people that can. He's denting the people that almost could, and now they can't.
Right.
And this keeps happening. This trend has been happening for the last, 5 years. We keep seeing it. First time. Okay.
Well, it's actually been happening for like the last 15.
Yes.
Yeah, I mean, think
So,
first
but-
time.
Well, I'm really young, so I don't know anything past 5 years.
Is his objective, though, that he believes that values are too high and that home ownership is going to be more viable if values are lower? Is that
So
what he's trying to do?
So his belief is that home values are too high across Canada, right? He strongly believes that prices are overinflated, and he wants to protect against potential large market correction, potential increase in interest rates, potential for borrowers don't have affordability, all of the worst case scenarios, right? But the third thing really that was interesting about his letter that the statement ignored, and this is, I think, a big one that you guys will appreciate from the real estate side. And coming back to the renters, so, if we look at it now that everybody needs home ownership, you need a roof over your head, regardless of whether you own or you rent. So if you can't buy, you get pushed into the rental market. So what does that do? That increases the demand for rental properties, part and parcel, that increases the prices for rental properties, right? Because now there's more renters. So the same issue is actually the biggest issue in real estate, to my opinion anyways, as to valuation. It's not about debt servicing, it's not about interest rates, it's not about qualifying rates or any of that kind of thing. It's actually supply and demand, right? The issue with real estate in Canada today is that there isn't enough supply to support the demand, and that is driving up prices, right? We just don't have enough viable product
You can't control that.
which we can't control.
I think you hit the nail on the head, Shubha. So I think that I'm always a believer that the market should always dictate. So all of this stuff that you guys are discussing is trying to control a market. But ultimately, If your concern is that prices are going up too fast or too high or whatever, well, how do you curb that? Create more supply.
Yeah.
Because if you create more supply, it's going to get absorbed, and guess what? The prices will level off.
But you
But
see-
instead of doing that, for various reasons, whether it's greenbelt, whether it's whatever, right? So there's very limited promotions, I think, from the government to entice more supply.
Incentive, yeah.
Less incentive. So instead, we're going to try and artificially control the prices by putting in these roadblocks, right? So I think you're 100% right on that.
Yeah. And the biggest danger to all of this is kind of back to the original statement that, you scream, danger, danger, and Canadians here, and you guys know this better than anybody, that real estate impacts a lot, right?
Yeah.
House values drop, so does retirement savings, so does, our livelihoods.
Well, why didn't we get the reaction to this that he was expecting? He didn't get it.
Low interest rates, right? Low interest rates, pent up demand. I mean, when you're borrowing at less than sub 2% right now for, fixed rate mortgages, especially like midterm fixed rate mortgages.
I'm
like
waiting
5
till they're
years.
going to pay me.
Yeah,
Then I'm going to borrow.
might be, right? But
We talked about that, right, in one of our podcasts.
What was it
Seemed
in?
outrageous.
What was the country? It was
Is it Brazil that does that?
Yeah, they had negative interest rates.
Yeah.
So they were borrowing from the Bank of Canada, and they were only
Absolutely.
having to pay them certain amounts. So
Yeah.
you got something.
We certainly don't want that here. We don't want to see that here.
Does that create negative commissions for you guys?
I hope not. We wouldn't be as expert as we might appear to be then.
I'm gonna drink both glasses of wine right now.
Same time.
Yeah. Oh yeah. Oh yeah.
Drink the expensive wine while you can.
That's right.
But yeah, I think, what happened, Paul, is it's simple. It's, one, the two insurers didn't follow suit. So the impact that he anticipated was going to happen truly didn't pan out, because when your competitors don't follow, then everyone just moves to your competitors. And that was actually the reasoning for his letter to the financial institutions. He said that, he felt that CMHC lost a ton of market share, which they did over that period of time. And hey, why are we not getting our market share? Well, because our customers no longer qualify under your policy, so we're reallocating those customers to your competitors that do qualify them.
Right.
So nothing changed.
Yeah, and I think that it's important to understand that every other lead that CMHC took, the other insurers used to follow. Right? Pretty much everything.
Typically, yeah.
Typically everything that
Typically.
happened, they all followed suit.
But typically
it's
they're
like,
a lot.
it's like the gas prices. They all changed
yeah.
at the same time.
Yeah.
Right? All the mortgage rates are similar,
Yeah.
right? But this was one of the few times where they didn't.
And
Yeah.
and we were glad for that. And this is I felt it was a poor thing to do
Yeah.
to Canadians that were sitting on that line, right? This does not impact the investors the way it impacts the first-time buyers. It doesn't. So I'll speak personally. I told Shubha this. I felt this is really, really poor move. And is he an intelligent person? Absolutely. Is he bright? Sure. But what's the number one mistake? The mistake is simply instead of understanding, and we're in the business of understanding your consumer, right? My opinion is stop trying to tell the consumer how they should behave and try and understand the consumer and really understand the problem. And Shubha, you were talking about it, and Taz, you were talking about it. Put your effort in other places because they are legitimate concerns. You're just, in my opinion, being a barber and actually cutting the hair and seeing what's actually happening when you cut the hair, is that you're impacting the wrong people. And it's been happening for a very long time, and it's getting worse and worse and worse. And now it's gone to the bank of mom and dad, and it keeps going and it keeps going, and it's more and more and more.
But there's a lot of side effects to what's happened. I look back in all the years in real estate, and it's just my analogy that whenever things were going, this is the prediction of the government. When they saw things going too fast, whenever they saw real estate rising, we got to stop this. And if you go back, there was the government tax in 1974, land speculation tax, and then it just came to a complete halt. And last year, 2017, now it's almost 3 years ago, they put the foreign buyers tax in. And I find that the government, it's kind of what you're saying, Taz, there's supply and demand, we all agree, supply and demand, there's a shortage of properties, and that's the formula. But I've seen over the years, it's just my analogy, the government seems to step in to try to put the brakes on. I'm not saying it's good, and I don't want to say it's bad,
No,
but
say it's bad.
it is bad.
It's bad and it's seldom
Why do
works.
they step in and
It's
they
seldom
shut
works.
things up?
What they need to do is they need to ease restrictions.
Yeah.
They need to have builders produce more product,
Yeah.
right? We have a shortage of product. And when you look at it from the real estate side, I think that over the last 10 years, so prior to 10 years ago, every spring we would get into a spring market and all of a sudden there would be a surplus of listings, right? And for the last 10 years, we've never had the spring,
Yeah.
right? We've never had that surplus of listings.
Yeah.
And that is the problem.
Yeah.
So what they're doing is they're doing all these things to affect the marketplace, but they're not fixing the problem.
Yeah.
And it's like
It's a
putting
simple
a Band-Aid on it.
Yeah.
Right?
Supply and demand.
And I think now I know how to state this. They're trying to control the marketplace instead of responding to it.
Right.
Right? They're trying to control it. And you know, we're aging better. That's a good thing. We're aging better. And then you were talking about this too, that people are not leaving their homes. They're staying in their homes. Right? So understand who your audience is and build policy towards that audience, as opposed to saying, well, no, you don't like wine anymore. You like vodka. No, I think I like wine. No, you don't. No, you like vodka. We don't have enough wine for you, so now you like vodka. No, and that's where it is. That's what's happening. So
Make more wine. That's always the
make
answer.
more wine. That's the answer, right? Give them what they want. But and that's
it's real estate. let them
it's
buy it.
actually an awesome analogy, because here's what happens. Now we all say we like wine, and there are 2 glasses left, and Tass says, "Okay, I'll give you $20 for those 2 glasses," and I say, "I'll give you 50," and Paul comes in and says, "I'll give you $3,000 for those 2 glasses of wine." And guess what happens? The vodka's just sitting there still.
Well, how much are you bidding?
Right.
I'll say just give 5 straws. Come on.
I'll just ask Paul to buy me a bottle.
Just buy me a bottle. But that's when you're asking about his comments. I really think that, and we see this. We've seen it before. We've seen the trend that it's really trying to control the Canadian consumer, as opposed to understanding their needs and really developing products around solving.
Yeah. Well,
the
I mean,
problem.
and listen, and you know, we're picking on him a lot, and let's defend it a little bit as well. In defense of it, for us in the industry, he's a company, so he did what he did. There's still 2 other choices that didn't do what he did, right? So we still have our options. Our customers, Canadians, still have solutions, right? Yeah, thank goodness, right?
But I wouldn't have a problem with him if he just did what he did. I have a problem with when he starts shaming other people.
Absolutely, I fully agree. But hey, you know what, Kendall? You will like this better than anybody, because I think that you feel very strongly about it. He's also not a hypocrite by doing that.
Fair enough.
He believes he's right. So why wouldn't he shame everybody? Right?
Yeah.
He believes what he did is right. Now, we don't in this room,
Yeah.
right? But he does. So if you believe you're right, you're going to say you're right. If he didn't do that, he's a hypocrite then.
Yeah.
Because then he's saying...
He's arrogant.
Well, exactly.
He's arrogant, yeah.
But what I was going to say on the other side of the coin is that CMHC is a crown corporation. So CMHC is funded by tax dollars. So the difference between CMHC versus their competitors, Genworth and Canada Guarantee, private companies, is he's got to answer to all of us as taxpayers, right? We're funding these loans. So if he makes the wrong decision, all of a sudden there's uproar. All of us, that's our tax dollars. What is going on? But they are also driven by mandate, which is more specific, right? Where I really wanted to get to. So CMHC has mandate that they have to follow, being responsible crown corporation. And original mandate was helping Canadians get into homes for the last, however many years that was.
And that's where I get frustrated. That's my challenge with all of this.
Well, I mean, from that perspective, we can't
That's where I'm
argue.
disappointed.
But that was their mandate. That's the key thing to keep in mind. And from that regard, they didn't fail us. They introduced 5% down. We used to have 0% down, right? We used to be able to use cashback mortgages. There used to be 40-year amortizations. So they did fulfill that end of the bargain for years.
Prior.
The days.
Right? Those were the days. Right?
But prior.
But today,
yes.
today the focus is actually on affordable housing. So they're shifting their focus to purpose-built. And they are looking at some initiatives to help developers and property investors get into or be incentivized to try to get into the purpose-built space.
Why are there no articles about that out there?
Well, this is the problem, right? This is the problem. We're here talking about it as responsible, educated industry members, but the leadership is screaming fire, right? Screaming danger. And that's the point that I was trying to make right from the beginning. It's irresponsible of any leader in any industry, regardless of what it is. When people listen to you, you cannot talk from emotion. You cannot talk off the cuff. You cannot talk without a proper understanding. We're talking about this today and everyone's, we're all shocked, right? How come this isn't talked about? Why didn't anybody else bring it up? I don't know the answer to that question.
But that's
it should be.
But it's interesting because you said we talk about hypocrisy, and actually your statement doesn't help. Your statement actually makes it worse for CMHC because they started from a place of let's get Canadians into homes, and I've personally, again, I won't speak for others, see a habit or a pattern of let's not get Canadians into homes. Let's not help those first-time buyers. You can't afford this. Right. So what's affordable housing? Affordable housing is making a more a fairer playing ground for those that do not have the same opportunities of those with money. Right. I don't have 20% down. I don't have 20% down, so now I have to qualify at different rates when I'm starting out. And why are you telling me that I'm not going to be a responsible?
You get better rates though.
Yeah, but we know why you get better rates, right? So that's not
cheaper cost of capital.
There you go.
Get better rates.
So, but that's not.
Right?
So that is not a direct result of trying to help a consumer. Yeah. That is just a byproduct of business.
Yeah.
Right. So that's very, very, very different, and that's why I'm talking about the hypocrisy of your mandate. Their mandate has shifted. It is no longer. Well, how do we help these young Canadians?
But it has. That's what I'm saying very clearly. The only difference is that the general public doesn't know that it has.
Yes,
it has.
Yes,
their mandate ran out,
and that's where that was my personal disappointment.
Yeah,
because it was just, I was very happy that the other insurers kept towed the line, and I was very, very disappointed that here's another thing you've just done that has damaged the have-nots.
Yeah.
The haves are okay, and I'm saying this now because we saw it in the pandemic. We're looking at this live every day, that all of the people that had made over a certain amount of money, most of them retained their jobs.
Yeah.
Didn't impact them. They held off. Then we started encouraging buying because they started saying they weren't buying necessarily because they weren't buying because they were afraid. They weren't buying, and it wasn't fear. It was, we're seeing all this in the news. So is this going to crash the market? Am I going to get a better deal?
Yeah.
And then we started encouraging them saying, well, you are seeing the 20% reduction right now. And they're like, what do you mean we're seeing it right now? Well, there's no bidding war. So go buy now.
That only happened if you acted quickly. That was true.
And we got
when
buyers.
Was that?
Right?
That day?
There was a window. There was a window.
I didn't see that day.
There was the month of April.
Oh, month?
Month of April. That was the month.
There was.
I saw a couple multiples. There was because the inventory was so low.
Depending on the,
right?
but depending on the area.
Yeah, widespread.
That was the best time. And we actually started to do with our lead gen. We started to do market updates, consumer market updates, to sort of show them, what's going on, to see if we can get them to take action, because everybody was on the shelf, right?
Yes.
Yeah.
Waiting for things to go down.
Yes.
And just like your story, the guy that didn't buy 100,000 over, he paid 150 over. And I'll tell you the story from 1986. So there was this agent in my office, right? And she was a very caring woman that wanted to make sure that her clients did not overpay.
Right.
So, in the 80s, you guys are too young for this, right? You're too young for this, Shubha? Shuba's shaking his head. Kendall's not as quickly
I told you,
shaking his head.
I started when I was born 5 years ago, so it's
Okay,
all good.
there you go.
There
Yeah.
you go. So in the 80s, I said to this person, Jan, we'll call her Jan. That was her name, but we'll call her Jan.
Yeah.
No last names.
She said, Millica, right? She said, she hasn't been in the industry for years.
Yeah.
Lovely lady.
Yeah.
I'm sure she's not watching our podcast anyway. But she said, on the client, and at this time, guys, we're talking about $140,000 for a detached bungalow. And her client would have to pay $145,000. She set the price at $140,000. We're not going over $140,000. That's ridiculous. That's too high. We've got to keep it at that. And I said to her that client, when they meet a good real estate agent, was a little dig on Jan, then they're going to buy a house. And the people that bought in 1986 for $140,000, by 1990, it was at $250,000.
Right.
Right? And all of the people that she prevented from buying ultimately paid more for a house later when they met a good agent.
Right.
Right? So, we can't get caught up in
Absolutely.
the price, right? We got to get caught up in what are we trying to accomplish.
Yes.
Right?
Yep.
They were still renting.
Yes.
Right? You need to get
sure.
into the home. So the other area that I wanted to go down was in my market update. A lot of the clients have this belief that the deferral on the mortgage payments that were introduced are going to stop, and then everybody's house is going to be on the market, and then the prices are going to go down. So they didn't go down yet because that hasn't happened. What say you experts on that scenario?
Yeah.
And I think, to start with, part of the answer is that most of the people have brought it up to date already. Is that
Yeah,
true,
so,
or do
you
we
know,
have stats on
Yeah.
that?
So I
Numbers on
gotta
that?
I gotta tell you some funny stuff. But go ahead.
Okay.
No, you go first.
Funny
No,
I
you
got
go,
funny
you
stuff.
go.
Well, do we want to hear funny stuff or?
Here, I'm going to tell. So here, I will give you stats. She will give you stats. I'll give you real life stuff. The individuals that took deferrals, and as I said, the people that were able to retain their properties were already in a certain tax bracket. They
I'm
kept their
scared of what he's gonna say.
they kept their jobs. They're okay, and they're in deferrals. Why? Why did you do this? Oh, because it was offered to me. Okay. The individuals. Here's a common thing. We started seeing this quite a bit. We can't advance a mortgage unless we take it out of deferral. There wasn't one individual that needed to refinance or did a purchase that couldn't take it out of deferral. So what is that? What is the trend that we're seeing? We're seeing that people just did it just because. We're not seeing in this demographic, and I don't know, you may say something different, but I'm just talking boots on the ground. We are not seeing the individual, maybe in the rental market that I can see that because you're looking at the rental income coming in, but just because. So especially for those that it was very easy to do. There were some lenders that it was very easy to go get a deferral done. And again, I'm not talking. Shubha will give you more round numbers, but
I think in fairness, you're talking very specific to your market. You
Yes.
know, across Canada, listen, this was a pandemic unlike the world has ever seen, right? There's people in Halifax that they only make $30,000 a year.
So
Their mortgage is
sorry. Let's bring it,
$80,000,
but
and they
let's
lost
keep
their
it to
jobs,
But I'm talking
I
to
like
this.
that we're getting the two guests to fight here. That's good.
Yeah.
Okay, go,
Right,
boys,
but-
go.
After he has a little more wine, he might hit me.
I'm talking. Let's talk GTA.
Right.
Yeah.
Right. Let's see.
So-
I know what you're going to say.
Stay out of
but let's-
Halifax.
Yeah. Let's talk GTA, man.
GTA.
So
People
let's-
that
let's-
kept their jobs, that put their homes on deferral, did not need to put their homes on deferral. They did it because it was offered to them.
Was offered, yeah.
Yeah.
That's why they did it.
For sure,
You
for
know,
sure.
the
But I
people
don't
that
think-
needed a deferral, guess who they were? They were renting. Again, the same thing that we saw where people that had well-paying jobs didn't lose their jobs. So why do you have a person that didn't lose their job,
Take a
didn't get a
deferral.
price reduction? Why are they sitting in a deferral? Because they could.
Yeah, well, there's like, and I don't disagree.
And I'm
with
speaking
the entire
specific,
statement.
yes,
Yeah,
I'm
I
not
don't disagree with
talking.
the entire statement, but when you get up to 12, 13% unemployment, drives the housing market. There's renters, there's people that pay bills. So even though they're not mortgage holders, they're impacting mortgage holders, right?
100%.
So there's a big factor in there. So statistically, you guys want to hear some stats? So 170,000 deferrals ish happened across Canada.
Across Canada?
Roughly. I should have come better prepared if I knew you were going to ask me the exact number there.
Well, I've got the numbers to check you on.
Okay.
There you go.
So you throw.
That's why I don't
throw
touch
the
stats.
number at me.
But does the deferral mean what every institution had a different setup?
No.
Or
So
is it carte blanche?
OSFI. So let's talk deferrals first. What
Okay,
do
I have
deferrals
just
mean?
some examples
Give the
for home
example.
capital. So I don't have overall
Yeah.
numbers, but there is some examples in this article about home capital and how many they had as an example. But
Yeah.
so I don't know the actually I do have another article that talks about the whole numbers. Keep going.
Well, let's
Keep
just
going,
talk
Shubha.
percentages. So we'll talk deferrals first. So what was a deferral, Anthony, to answer your question? So typically speaking, OSFI, who's the regulator, right, of all of the financial institutions, they allow banks to defer up to 3 months of mortgage payments, okay? When a mortgage is deferred or when a mortgage isn't paid for 3 months, longer than 3 months, it's considered to be non-performing. So when a mortgage is non-performing, there's other costs associated with it. There's hedging costs, there's risk costs, there's all kinds of stuff, right? So when the pandemic hit, they essentially allowed that to be extended for 6 months.
Right.
So they made an exception to the rule and allowed it to be done for 6 months. So did a lot of people do it as a preventative measure? Absolutely, of what Kendall's talking about, right? I don't think it was people that did it just to do it. I
But
think
it's
it was
added on
people.
the end of the mortgage.
What happens essentially is I'm not going to make my mortgage payment. Your mortgage payment's $1,000. 500 of that is principal. 500 of that is interest,
Sure,
right?
interest.
So your mortgage is $100,000 today, $1,000 payment. 500 goes to principal. It's $99,500 tomorrow, and you pay $500 in interest, right?
Right.
When you defer that mortgage, your $100,000 stays at $100,000 because you're not paying down principal, and the $500 interest portion gets added on to the top. So by the end of, let's say, 6 months, in this example that we're giving
103,
here, you
you're
could have a
3 grand up.
103
Yeah,
balance,
yeah.
right? So a
But what's
103
the problem?
mortgage.
Is the concern that they can't make payments after that? Or
Yeah.
what?
The concern.
Well, did they have to pay that $3,000 in
No,
interest
It's
back?
amortized, so
They just started making payments again.
yeah.
Yeah.
But I'm wondering, what's
That's
the
okay.
commotion? What's going to happen? Does that mean all these 100?
The sky is going to fall. No.
Once the time's up, the time's up. They got to make their payments.
Yeah.
If they don't, then they can go like today in default.
So the concern was, and it's a theory kind of given a name called a deferral cliff. The theory is that right now we've been coasting through this pandemic with these availability of deferrals. We'll get to the numbers specifically of.
I'll
who
give you the
utilized it.
specific number
Yes.
in
Okay.
Canada.
Go. Specific number in Canada.
775,000
I knew there was a
mortgages.
7 in there.
Yeah, were
So, yeah.
deferred in Canada. And 470,000 credit card payments were also deferred
Yeah.
in Canada. And they also say that the result was that delinquencies remained low and consumers' insolvencies fell 45% in the second
Yeah,
quarter.
I hope
so.
so.
When there got deferrals, nobody has to
No
go
one's
in
defaulting on their
insolvent, right?
loans. Yeah.
But it's after this,
Yeah.
is over, what's going to happen.
So now you get to this moment in time.
Yeah.
With these, let's say, these 775,000 mortgages, and then you have a deferral cliff. So now you argue, or people will say, well, there's the potential for those same people
To not be
that
able-
now don't have the capacity and no longer eligible for a deferral because that 6-month period has come to an end as of September 1st. So come October, doesn't exist anymore. Will they be able to make that mortgage payment? So is that mortgage payment going to go into default? Right? That was the concern. And I mean, it was a valid concern in April, May.
But if they're not
right?
working unemployed, probably they won't. But a lot of people, I'm referring to what you said, well, I just did it because it was offered. Hey, like
And
I'm,
th- and this-
I'm
and- and-
comfortable. I don't need to worry. I'm going to just do it.
Here's an employed person that needs a deferral is a person who has a rental unit. So you're looking at that income to pay the mortgage, to debt service, for lack of a better word, so you need it. But
Yeah.
what I'm talking about is all these individuals that, because what would be an interesting stat is how many people retained their jobs and deferred their mortgages.
Yeah. Well, we know the stat. It was a large number.
But then they should continue to pay.
Sure, but
Yeah.
I'll give you.
But it was preventative.
So you know what?
I'll
And,
give
and
you
it's,
some
and it's
numbers
funny
on,
because
on that with an example. So this is just an example of Home Capital. So Home Capital had 10,000 mortgages that were deferred, and as of July 31st, 7,000 of them already
Yeah.
stopped the deferral, right? So those were the people. So really 3,000 people needed it.
Yes.
Or didn't stop it. So
Yes.
the other 7,000 didn't really need it. They just took it because it was there.
they took us
So,
there.
so the idea is that we had 775,000. If only 30% of them, then we really only have 210,000 that may be in problems, not 775,000.
I believe it's 100. I believe that's the 170 number. That's what's still existing.
Okay, so the
So-
210 that I rounded
and then-
that to,
yeah.
and it's at
So-
170. Okay.
So RBC, and I'll go by let's go by some of the bigger FIs in terms of their numbers. So RBC's said that 90% of their deferrals are back up.
Okay.
Scotia and BMO are all
And
in
back
the
up just means that
80%.
they're now paying their
They're
mortgage.
out of deferral.
They're out of
Yeah,
deferral.
They're out of
Okay.
deferral.
Yeah.
So to bring the question back now, and
Yeah.
to bring it back to the concern.
And
of-
let me give a fair caveat.
go
Fair caveat is some of the people that I'm making these bold statements about actually went in and initially concerned. They initially went in saying, I don't know if I'm going to lose my job or not. So they went into a deferral state. They did not take it out of a deferral state as they kept inching through the pandemic and realizing they were going to keep their job, because now everybody loves it. You got this surplus income, right? And it's just the mental state. It's just how we deal with credit cards. It's how we deal with debt, right? I don't need to
Yeah.
pay it. I got a little extra money. This is awesome.
Yeah. I mean, listen, I'm not on that side of the fence with you that it was as bold as people did it just to do it. I think that
No,
come
it
April,
started-
like,
it
listen,
started with a
if
real
you guys
purpose.
weren't scared, I commend you. I was
It started with a real purpose.
I didn't know if we were going to
wasn't-
be
I
able
wasn't.
to maintain. I didn't nobody knew, right? I didn't know what we were going to be able to manage. I was scared, right?
We
And
argued about this. I was on the opposite side.
Kendall's never scared, right? He's a millionaire.
too
He
bad.
doesn't have to worry.
It's too bad I can't hug him right now because of the pandemic. I feel like he needs a hug.
I was saying, and I had this conversation, talking to the agents and talking to clients, that listen, the world was stopped. I come from the hospitality business. That's my background in it. So I know the real destruction it has done, right? But it is specific to certain types of business. So my argument was the same. Guys, this is not an inflated dollar. This is not a misrepresentation. We have stopped the world. We are going to turn the world again. And when that world starts turning, the only thing that's going to put us back in jeopardy is if we need to stop it again, right? But we argue about this. I always say economy rules. You look at what's happening in the States, right? You look at the fact that we've got all these weird rules with COVID, but schools are back open. Okay? Economy is going to rule. I don't think, and if maybe we can edit it out if it does, if I'm wrong, right? But I think they're just going to keep the world turning, right? And that's where Shubha is right to be cautious. And it was unfair of me to say that people did it just because.
Well, it's logical, right?
Right?
Like, I
it
think
started
that
for the right
nobody
reasons,
knew.
but it was prolonged for the wrong reasons, in my opinion. Because for all the individuals that went to buy a new property or went to refinance, we didn't have one person say, oh shoot, I can't do this because I can't take it out of a deferral. They all just, yeah, no problem. I already called, it's out.
I don't think so much that they just did it to do it.
They started with the
I
right
think
reasons.
If we rewind to end of March, beginning of April,
Scary.
I think everybody kind of said, okay, let me make sure I got my ammunition, right?
Yes.
So
cushion.
what did they do? They stocked up their fridges.
Yeah.
I think people stopped
Toilet paper.
spending, right? They,
It's got the
okay,
cushion.
Shubha owes me $10. I'm gonna try and collect it because
Yes.
I want to have it on the side in case I need it.
Did you get the 10
Right?
bucks from Shubha?
I did.
I didn't get mine.
You didn't get yours?
I
Keep
did.
charging
I still
the
remember
interest.
the $50.
Right?
That was
So-
the attitude. Yeah.
But I think that was
And that's the
normal,
point,
because
right?
like you said,
Absolutely.
Shubha, I think for a lot of people it was like
Uncertainty.
what's going to happen, right?
Uncertainty.
So
Yeah.
when you're uncertain, what do? You stockpile, right?
Yeah.
So I think that's what the deferral was, right?
It
So-
started with the right, and that was unfair of me to say. It started with the right intention,
Yes.
but as people realized that they were
they
keeping
got
their
used to
job.
me, man.
They're like, yeah, I already did it. I got to log back in and turn it off. I'm not going to do
Look at
that.
the other side of things, right?
Yeah.
So anybody that you talk to, right, all of the money that people have saved because of the not traveling and all of that. So you go anywhere and try and buy a cottage today. Try and go buy a jet ski.
Yeah,
Or
can't
try
do
and
it.
go buy a
They're
boat.
delivering in
bicycle.
2022.
For sure.
100%.
Can't get a bicycle.
You try and get a bike, okay? But I mean, even large ticket stuff,
Yeah.
Kendall, where
Yeah.
Put a pool in.
get a swimming pool. I have a friend that he said
It's deferral money.
yeah, you try and get a swimming pool. Right?
Yeah.
So it's not that
$100,000.
I think all of these people figured out, okay, I stopped spending, and I even maybe put some money aside, right? But then, I'm not going to Italy this summer. I'm going to save $30,000.
That's right.
And I didn't lose my job.
Yes.
So
And I didn't go
I'm looking
anywhere.
around thinking,
Yeah.
okay, and plus I'm a little bit bored because I can't travel.
Yeah.
So what am I going to do? I want to buy a jet ski, or put in a swimming pool, or do something.
Yes.
Yeah.
You know, so I do think that.
But isn't there validity
side
to
of the
that?
equation.
You don't-
But in the beginning, everybody was freaking out.
But
Everybody
don't you
freaking
think
out.
there's validity to that? Listen, you know what? Because I do sit on the opposite side of this argument, and I would say that when we all bought our first homes, did we all not go to Leon's and get deferred furniture?
Yeah.
Even if you had 10 grand in the bank, did you not go to Leon's
I
and
had
say, I
about-
want to
As long as
buy?
there
I had
was
$5.
interest, you did it.
There was no interest, you went and did it, right?
paid
We're
up
talking about hundreds of dollars in additional interest to defer for 6
I went
months.
to Goodwill and got the furniture. Just
Well,
so you know. I
Yeah.
don't know about you, highfalutin people going to, where'd you go? The Brick?
Leon's.
Leon. I don't know.
Leon's.
Highfalutin
Leon's.
people
You went to
going
Leon's.
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 Chilling.
I didn't realize my
But you just-
$700
but-
sofa was on the high end.
Shuba, you just actually just made my point, and that's what I'm saying is that the human psyche is a simple thing. If I can get it, you just said I put it on a no interest payment because I could get it.
Yeah.
That is my point with the deferral.
Yeah, no, for sure.
Right? What do you
No,
mean?
but you're,
what do you mean
but
I don't
you're
have to pay my
making it
money?
seem like people are doing it irresponsibly. I'm
Somewhat.
sorry, I'm taking it as you. Maybe I'm incorrect. I shouldn't put words.
So what I'm saying is
Yeah,
that they
yeah, I
started
might be
they
taking
started
it
with the
wrong.
right intention. When they recognized that they weren't losing their position, their job, their income, they just kept it going. That's what I'm saying.
But so okay, so back to the original question. I think either right or wrong, it doesn't really matter significantly, right?
It doesn't matter.
I'm on the side of the fence of if you feel more comfortable with a deferral and it's available for you today, utilize it. You know, if you're on the side of the fence where you shouldn't be utilizing it if you don't have to, either or, it's a personal decision.
And I don't think it's wrong.
Doesn't-
I,
it's
yeah,
not
I,
wrong.
really, it's,
So that's the way I was
yeah, I have
taking
no
it,
opinion
right?
on it.
But to answer your question
Drink that line
about
there.
impact of the deferral, so we're now back to vast majority of people out of it, right? So at the end of the day, people didn't fully need the deferral. We've seen massive increase in job, 500,000 jobs in July. 300-something thousand jobs added in August. We're seeing the economy back increasing back, right? 70, 80, 90% of deferrals are out of deferral now in a lot of cases. So the cliff that we talk about might not be the cliff that is assumed, right? So could we
Is it
see
just a hill?
probably not even a hill,
Not
right?
even
It's,
a
it's
hill.
just a bump, right?
It's a
So do
bump.
we see a lot of people having to foreclose on their homes? I mean, could you see it possibly in the short-term rental market?
Yes.
Maybe, right? Could we see it in the investor side of the business? Those are things that, we don't understand the numbers on fully yet right now
Yes.
today, but owner-occupied principal residences, I think are safe,
Because
right? I think
there
for
is
the
a
most
challenge
part.
too.
I'll give you. We're going to talk August market stats,
Yeah.
and we'll talk a little bit about rental stats. So we'll give you some
Awesome.
good info
Interesting.
for you on that as well.
Awesome,
Yeah.
because I got to do a market update tomorrow. so
There you go.
Perfect.
There
I'm
you go.
counting on you,
I'll even give you my collateral material here.
All
so
right,
you can
sounds
use that
good.
on
Yeah.
there. Okay.
So I want to say I'm not judging anybody. Do what you want. If you wanted to put a deferral for a good reason or no reason, my point that I was just trying to make is what Shuba's saying. I don't think there's a hill. I don't think we're going off a cliff with this. I think maybe there's a little bump. The assumption that I'm making, and Paul, you will rectify that with the stats, is those that really needed a deferral, and this is a challenge that some people in condos are having. You guys would have seen it. Is that very hard to evict somebody, then they're not paying. They're stuck with a property now because they can't get their tenant out, and they may have put that property in deferral because they're not getting the rental income.
There is
That's
a
a
dark
challenge.
side to the deferral, though, that I do want to talk about.
Is that the
because-
underbelly?
No, there is a dark side to it, right? And the dark side to it is, and you know why I caution it, just the statement itself, is that the people, and I know this for a fact because I've spoken to customers that have been in this situation, numerous customers. The people who have been able to easily offset themselves and come out of deferral when they needed to, don't forget they're also getting incentivized income, right? People are on CERB at $2,000 a month.
Yeah,
People are taking $40,000 loans. There are all kinds of government financial stimulus right now where we don't know what the impact of that is. Nobody knows, right? So I agree with what you're saying. I'm very cautious about how I say it. I think people are out of deferral. Yes, I fully agree. Majority of people are out of deferral. We shouldn't see a massive October, we can't make our mortgage payments and the economy crumbles and listings on the market, power of sales everywhere. I do not see that at all happening. But we don't know the true results of all of the stimulus.
But it's
We're seeing households with
Please, Steve, run that last statement that Shubha made as a little marketing piece for us. Okay, okay. Just mark that down.
which
Okay.
is
Sorry,
no
Shubha.
power of sales.
Yeah, no power.
No power of sales.
But again,
Shubha has spoken.
No power of sales on my little chair here. I don't have a nice armrest like you, Paul.
on the
I gotta find my armrest.
comfy chair.
Look at Paul and Taz.
They're even back there. They got recliners over there.
Boys, listen, we got to stop talking about the market and we got to try the third wine or the third wine. So that's your
Important.
right hand glass. Your right hand glass.
Okay.
Kendall, right hand
The other
glass.
right, Kendall.
Your right hand glass as well. So give
Yeah.
that one a try. Anthony, we're trying the next wine. It's your left hand wine. I got you guys are all sort of backwards on that. So now don't guess Sangiovese for this one.
I forgot
It's
the
not.
word.
It's not.
This is of the red variety.
Yes,
This is the white grape.
Left-hand glass.
This is. Do you smell the sulfur?
the left for
You
us.
got.
First of all, how could there be white wine when grapes are green?
That's a good question.
Listen, the juice is white, whether it's
Yes.
red or green.
Yes,
It's all white juice.
it's white
right.
juice. The
You know
actual
why it's
flesh
red?
is white.
Do you know why it's red?
They put the skin in.
Skin.
And the harder you press it, it can deepen it,
Yeah.
whatever, how much pressure you get from the skin. I was listening.
He was listening earlier on today.
And in the old days, they used to press with their feet
Yeah.
before they had actual pressers.
Oh. Very cool.
That's the fun part. Stomping.
Did
grapes.
people really do it? Was that the old way of
That was
making
the old
wine?
way.
Yeah.
Absolutely, stomping grapes, right?
Stomping
Now
grapes.
it's all machines and.
Machines, yeah.
I actually visited Napa, and I went to a high-end winery where if you harvest the grapes yourself, you can rent the vat that you ferment the wine in, and you just control it all on your iPhone.
Oh wow.
Yeah. This was Wheeler Farms, and they make a bunch of great tour. Actually, I think we tried a tour once on our tasting. You guys remember that one?
Rings a bell.
Rings a bell? Okay. I only brought a couple back because I have those down in the States, but yeah, just
Wow.
unreal. So you can have just one vat of wine as a small vintner
Yeah.
and control things on your iPad, do your, your pressing, or if whatever the processes are. I'm not a winemaker, but there's
Right.
a bunch of different things.
I was
going
going
to
to say, what do you control?
No, well, yeah,
Well, that's not that impressive because Shubha just parked his car
right.
with his
No,
phone.
halfway,
before we
halfway. He didn't
started.
make it all the way.
No, I brought it back. I brought it back.
Are we allowed to say that, Shubha? Are you allowed to do
Oh,
that
yeah, I
with your
can
car?
do that.
Okay.
Absolutely.
Yeah.
Okay.
All right. So-
Yours is the audio out there, right?
No, the Tesla.
I know it's the Tesla. I know it's the Tesla.
Very fancy.
I know it's the Tesla.
Made it halfway, and then he ran out of signal.
And then the juice was out. The juice was out.
I don't know. I didn't squeeze. I didn't press enough skin into it.
It's hard enough.
That's right. Okay, gentlemen, the third wine. This is also an Italian wine.
I like those Italian
You like those Italian wines? Tass, did you try this one?
I did.
Yes. What is
I
your
did. My
what is
opinion?
your opinion on
Well,
this
actually, I'm really liking the second one the most so far. I don't know if you're asking for I don't know what kind of
Sangiovese.
or where it's from.
It's
I
not-
only
The second one.
Well,
The second one.
yes,
I
correct.
only know what I like.
Yeah.
The second one I think had a great nose and a great taste.
Yeah.
This one is good. But,
Yeah, this is the Morello one.
the
The
second
Barolo.
one is my
Barolo.
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 Yeah, which is the
That's what I said.
and I don't. It's a Barolo. So it's the I don't know if you know how to say the different grapes, but Nieblo.
Nieblo.
Nieblo is the grape variety in a Barolo. Okay, and this one is a very earthy wine.
It's
So
nice.
we're gonna have an Osso Bucco or something like that. You know, wine. You want to always look at what food are you gonna pair it with.
Yeah.
It's really
Sausages
earthy sausages.
Homemade meatballs.
Yeah, that or maybe even a bolognese sauce, right? That Barolo is going to go nice with that.
Yeah.
So that's what we've got on this third wine. It's also, I think, 2010. You just look at that third
I
bottle.
thought he was gonna taste. I thought he was gonna say 2000 a
I
bottle.
was about to say, oh man.
I was gonna say, how many
It's so-
deferrals you gotta go?
So what do you guys think of the third wine?
I like this wine.
I like the
Yeah?
I like it.
But I'm with
Yeah.
you. I like the second.
Yeah.
Yeah.
Second one
the
was
second
good.
one
I like the second
so
one.
far.
They
Okay.
are, and I don't know if I'm going to use the right word here in terms of
Listen,
wine, but
so just so you know, Shubha,
These two bozos here, we
Yeah.
say, you know, me and Anthony, I'm pointing at, right?
yeah,
Paul's looking for all the right terms. We're like, yeah, it tastes like mud.
Yeah.
It's rosy.
It's,
It's sharp.
It's got a heavy flavor.
well, the aftertones. I mean, you know,
Yeah.
Paul's like the sommelier at Auberge. He's staring at us right now.
And I just don't say
This is
anything.
the right language.
I just keep quiet.
listen, the last time I was in Auberge, he was excited about the wine I brought.
oh,
Okay, just
Wow.
so you know. Yeah.
Next time I go, and he's gonna remember me. He's gonna be
Yeah.
there's that idiot that came 8 years ago that didn't know the wine was about. I'm gonna say
Self-reference.
I know Paul.
Yeah, there you go. I'll give you a bottle to take the next time you go.
All right, sounds good.
It was,
That'll really blow me
Give
away.
him a rotten bottle.
I won't know the difference.
Can you take care of this for me, please?
yeah.
I'm gonna open it with a
We wa-
sword.
We want him to go in and say to the sommelier, "This is a special bottle that my friend gave me," and I'll give him some wedding wine that I got.
Spumante.
Oh yeah, it's very special.
But I think the second and third are a little lighter tasting than the first one.
Really? Okay. Yeah. Yeah. So
Is that the way you say you're wrong? Really? Okay.
no, I was actually going to back up his statement.
Oh, okay. There you go.
So,
See, there you
so,
go. See?
the second and third, I think, are both 2010s, and the first one was a 2015. So it's a younger wine. So I think that it is the age that is giving you that lighterness,
Okay.
right? And really, the third wine, the Barolo, is a more earthy, a more tannic wine. But if you notice, as soon as I got here, I decanted these wines, right?
Yes.
Other than the first one, just to let them air out and sort of get going.
And does it have anything to do with how much they press the skin? Does that adjust the
Yep,
flavor
so-
at all, or is it just color?
So the skin affects the color and affects the tannins in the wine. So a lot of times when you have a lot of skin press, you get a lot more tannins. But there's a lot of wines that they actually don't take the stems out.
Oh.
Okay.
Okay.
So the stems.
Extra juice.
Oh man.
Everything in.
So the stems.
He's picking your
this
teeth
is-
while you're
This is when
drinking
you,
wine.
when
Is
you
that-
hear
is that juice
when,
white
when,
too?
When you hear hand picked and hand sorted, right? You know, when it's done with machines, there's stems in there, and the stems will also add a little bit more tannin to it, right? These
Got
are
it.
usually
Fiber,
not in-
too.
Not in the high, not in the higher price wines, but yeah, a lot of wines have stems in them, right?
Oh, wow.
It's just the way it is, right?
Wow.
So all good. So what we're going to go to now is we're going to go to the boys that have a little bit of juice, and now talk to them about what they feel the market was like in August. I know we talked about it a little bit before we had the stats, so just want to get your take on things for August, and then we'll get the mortgage guys' view of the market as well, because they obviously are in the market from the mortgage side of things, but yeah. So, Anthony.
No, it was just flying. The market was flying. There was just a huge amount of offers coming across the desk. In terms of management side of the equation, I was getting an awful lot of questions on, again, if there's multiples, but more importantly, what I was concerned with is a lot of them were going in firm, and I'm a bit of a puppet on a string with that. The first thing I say, do they qualify? Did you talk to the mortgage folks? Because certainly we want them to talk to you and to make sure that these people are going in firm and there's not a problem. But Paul, it was just like busy, crazy. The amount of offers in terms of the agents preparing and even front desk that they weren't sure how to do it, were assisting. So that's basically it. I did notice that listings were coming in as well. I know we're repeating ourselves that, gosh, there's the whole problem with this market.
Some people didn't listen to the last one anyway.
Oh, they
so
did?
Go ahead and repeat
So go
yourself.
ahead.
It's all good.
Well, there's a shortage of listings. There's a shortage. And this is what the problem is. But I did notice an upswing without knowing the statistics, just on the floor, that there were a lot more listings starting to come in. People putting their property. So the stats guy will bring us up to date on the listings, but I noticed that. So all in all, the busyness, and with the busyness, there's always issues that come up, but that's what we're here for, to make sure everyone's doing things right.
Yes.
But I don't know, Tash, you might have a different position on that, or the same maybe?
No, I think that I'll kind of mirror what you just said, Anthony. August was extremely busy. The last week of August, I would say we had a bit of a lull, but traditionally, most of August is usually, in a traditional market, all of August usually slows down because everybody's away, they're on holidays. So I think as we've been coming out of this pandemic, or longer into the pandemic, in August, people did start to loosen up, and they were kind of like, okay, enough is enough. I want to maybe even go to a cottage for a week or whatever. So I do think that people were traveling more locally, right, and taking more time off. So I think that was probably what the little bit of a lull was right at the end of the month. On the rental market, that's a little bit of the opposite. There's a ton of product. Everybody is complaining that it's very difficult to get tenants, and I'm talking primarily downtown condos.
Right.
So there's a huge amount of supply, and that's driven the prices down substantially on condos. Where I see even now stuff that's Durham or Toronto under $1 million is absolutely crazy. So we had a bungalow listed, and in 4 days, 150 showings. Yeah. Like that is just, and this is happening now, right? So that gives you an example of how crazy it is if you're in that sweet spot, right? Yeah. That $700,000-$800,000 range.
That's the sweet up
no
to mill.
product, and that's such a sweet spot for first-time buyers, because they're, you get in there, you can rent the basement. It's just a sweet spot for a lot of people, and there's no product, right? So to have 150 showings in 4 days, like that's insane.
Yeah, but we're in September now.
and
we're in not even August.
This is now. Yeah, this is now. So my point is, if you're in the right place, in the right price, the market is extremely active. What I have noticed is a lot more listings, downtown condos, and again, for various reasons. Maybe people aren't getting the rent. Maybe people want to, leave a condo and go to a house.
I think
people that had Airbnbs.
That's what I was going to add. The Airbnb
the condo market, I think, is very different right now, because there's a lot of factors affecting it.
Yeah.
So you don't have students.
Yeah.
Sorry, you don't have foreign students,
Yeah.
right? Which is a good chunk of people in the downtown core, right?
And not just foreign students, you don't have other students because
Other
they're doing
students, 'cause a lot of
online.
them are
Online
doing
learning.
They're
Yeah.
not
Exactly.
moving into there.
So
right?
you don't have that student population renting. You have the whole Airbnb challenge where, although it's allowed again, really there's no demand, right, for the Airbnb.
Who's
So
gonna
all of
take
that,
it? Yeah.
It's just creating a lot of product, right? And then I think you have a smaller percentage of people where they've decided to leave the condo lifestyle and go to the house lifestyle, right? Whether it's because of the pandemic or job changes or whatever. But I think the other factors are probably more important. But is it active? Super active. Obviously, we're cheating a little bit because now I know what the stats are. But even without the stats, Paul,
Just on the floor.
I think I mentioned to you, I think we're going to probably have the best August ever, right? Just judging by the
So you know
phone
August is
traffic,
over, right?
Oh, yeah, I
August
know
is.
that.
So we did have the best August ever.
I'm admitting that it's easy for me to say that now because I know the stats,
Right.
but that was my feeling in August, right?
Right.
He said around August 30th he felt that.
Yeah.
No, it's fair statement.
You guys can go back on facts because during one of my meetings, I actually, which was I think the third week in August, I predicted we were going to have a record August. So
So
You said that at the
know,
beginning of
we
it.
often go back to quotes that Tassis has said, 6 podcasts ago that were going to happen, in August.
They're all correct.
That's when he was always spot on.
They're all correct.
always correct.
Tass has the crystal ball.
Absolutely.
All right.
I'm always right, and even when I'm wrong, I'm right.
Love it.
So let's, because you were talking more about the rental market, I'll give you some actual stats from the second quarter of the year for the rental market. And the rental market is certainly very, very different than the resale market. And we always look at supply and demand. So in the second quarter of 2020, there were 21,703 properties listed for rent, which is was a 42% increase. And the number of leased properties in the second quarter was 7,300. So we have we have a 3-month supply of rental units in Toronto. And for the housing market, we have less than a 1-month supply, right? Or 1.7, less than a 2-month supply. So the idea is that the rental market is hit. So when we look at the average price of a 1-bedroom apartment in Q2 2019, it was $2,200. In Q2 2020, it was $2,100. So it's down $100 a month, right? And this is for the reasons that you talked about. The tenants are not there. The Airbnbs are out. And then the third reason is that when we look at what drives the rental market, it is immigration.
Right.
So the majority of new immigrants that don't come to the country and then buy a house. They
That's right.
usually settle in, and it's interesting because we have an extremely multicultural organization with Century 21 Leading Edge. And as a result of that, when we go through market shifts, right, a lot of time market shifts are cultural. So if we had a scenario where the Sri Lankan community is in a buying stage, so they arrived, this many years ago, and now a lot of them are buying, that market is very brisk,
Right.
and then the Asian market is maybe not brisk,
Right.
So by having a multicultural organization,
busy all
we
the
seem to
always
always be
turning,
busy.
yeah.
And just to give to show that Tassis's market predictions again were correct for August. Century 21 Leading Edge had its best month in our history in August,
Congratulations.
and we
Congrats.
sold over 1,000 transactions in August.
Wow.
Amazing.
It's helter skelter, right?
Amazing.
Wow.
And the accounting department, when we look at why we're not able to keep up, that's part of it, right? Over 1,000 transactions.
Wow.
So it's just the market is crazy. So the other thing that is happening with the rental market is that a lot of investors that bought condos are having those condos close. So we also pointed out that a huge opportunity is in the assignment sale of new condos. So whether they can't pass the stress test and get the mortgage, or they look at the rental possibilities and say, hey, we better sell because we can't get this rented. So that is affecting the resale market. So I'll give you guys a couple of stats on the resale market.
For tomorrow's meeting.
I'm
What's that?
listening
He's
intently.
writing them down in
yeah.
his brain.
Listening
I'll just
intently.
give you that. You can review the stats on the rental, and then we always look when we're looking at that market update that we do for our lead gen is looking at supply and demand, and we actually start that presentation by looking at the fact that before the pandemic, where did we start, right? And a lot of times people predict the market and look at market conditions based on all of Canada. So when we look at all of Canada and we look at months of inventory, and months of inventory means if no new listings come on the market, how many months does it take to sell the current inventory?
Right.
And you look at the oil producing provinces, they were at 6 months. You look at Newfoundland, they were at 10 months of inventory before you ran out. And when you look at Ontario, it was just under 2 months before the pandemic started. And right now, we're at about 1.7 months.
Wow.
So this is not a buyer's market. This is a seller's market.
That's right, yeah.
Right? Now,
And has been for a very
and
long
has been
time.
for a long time.
Yeah.
But I will tell you that because of the effect on the rental market and because a lot of the new construction condos and the condo market contributes to the rental units in the GTA, that this is shifting. So we had in August, on the Toronto Regional Real Estate Board, 10,775 transactions, which is up from 7,682 last year in August. The average price went from August 2019 of 792,000 to 951,000
Wow.
in 2020, and that was up from I think 930 in July. So the market continues to push up. But what we have had for the first time in August is that the new listing inventory has risen at a larger pace than the increase in sales. So we were, in June, we were at 24.6% increase in number of transactions and a 23.9% increase in listings, right? So they were always matching. And when we look at August, for the first time, so we had a 40.3% increase in transactions, but we had a 56% increase in listings, right? But then what you need to do is you need to drill down, and I didn't print out all those pages, but I'll send those to you, Shubha, if you need them, is that when we look at that and we drill down on the different types of properties. So when we look at the detached homes, in the sales of detached homes, there were 5,400, which is a 50.6% increase
Wow.
from the previous month. When we look at the condo apartment market, there were 1,536 transactions, which is only an increase of 10.9%. Okay, so we really see that big shift where we still have helter-skelter market in the freehold, the detached, semi-detached freehold properties, but in the condo market, it's still an increase, but it's a smaller increase. And I don't have the stats with me here, but the increase in the inventory or the new listings, it was predominantly in the new construction or in the resale condo market.
Right.
So the condos were adding that extra inventory, but that market isn't as brisk. And when we look at the year-over-year price change, the year-over-year average price for detached, it was 20%, and the year-over-year increase in the condo apartment was 9.5%. So I predicted a couple of months ago, because I didn't consult with TASUS before I made this prediction, that we would see in 2021, and I guess I still have a few months left, that we would see a 5% decline in the values in the condo market, but not in the freehold market.
Right.
That was a prediction that I was making in April, May.
Right.
And I didn't consult with TAS, so we'll see by the end of the year if that
TAS is
actually comes true. But we are moving closer to my prediction as those numbers decline. And it's interesting that it's a decline, but it's not a negative number. They didn't go down; they just didn't go up as much as the rest of the market. The average price, when we look at month over month, what I was talking about, so in July we had 11,063 transactions. Average price was $943. Average price in 2020 August was $951. So the market continues to be a brisk market, and that I think has leveled off somewhat because that condo area is leveling out, right? But all great stats. So TASUS, what's going to happen for September, October, and November? We need to know.
Yes.
Shubha, I'll give you that as
September,
well. You can
October,
take
and
that for your-
November. I think that we'll probably continue this trend. So I think that the condo market is going to not go up the way it was going up, and it will not keep up with the detached houses. I think detached houses will continue to go up, and I think we'll end up, in terms of an average price, we'll end the year higher than where we are right now.
Okay. And what about in the condo market? So detached going to be higher. What is the condo market going to be?
I think the condo market could potentially be lower than what it's at right now in terms of an average price.
Okay.
But I think the increase
Maybe he's justifying what I predicted a few
Maybe
months ago.
5% lower.
Okay.
right?
Yeah.
Yeah.
Okay. Very good.
Yeah.
And then next year, it's too soon to say.
Too soon to say.
Too soon to
Okay.
say. Too many other factors that come
Call
into
him next
effect
week.
there.
That's right. It's
Let's see if we get through
interesting.
school.
Yeah, call him in. Listen,
I have to
Tash,
rub
call
the
him in
crystal ball.
December. Call him in December. You got a prediction on the end of the year.
No, it's you know what you said. You know,
We gotta see what happens
I
in
don't want to
school.
say what I want to happen, right?
Yeah.
I'm saying what I see happening. Are there concerns? Obviously there are, and I don't believe that the total economic effect of COVID has been recognized yet, right?
Right.
I think there will be a shift in the way businesses are done, in the way what's happening right now, right?
But,
So,
it-
and I don't think so. Until that plays out, we really don't know what the answer is.
And
right?
I pay attention to the hospitality market because I come from there, and they're saying that once patio season is over, it's not done. Another 60% may be gone,
Yeah.
right? So there are damaging effects for certain
Yeah.
industries that they're going to impact everything overall, right? So we'll see. We'll see if we don't get through school. If school gets closed, we may have a problem, right?
Yep.
If school continues, and apparently I think, what's the rule? If there are 2 cases, they shut down the school?
Different schools are different. Some schools are like 1 case, they shut down the class.
So just so you guys know, I need an empty glass.
All
So
right.
that we can try the fourth
You
wine.
definitely have to try the fourth one.
The fourth wine is the.
So there's a new winner in town.
Tass has already tried
Yeah,
it.
That's
yeah,
already
yeah,
making
the
the
fourth one
prediction.
is fantastic.
You know, you were talking some interesting numbers, and I listened very carefully to one specifically, which kind of always gives me an indicator as to what's happening in the market, and I love hearing it when I talk to real estate agents, because you only get that insight from realtors and real estate agents, is the traffic on showings. So when you have 150 viewings on a property, it only tells me one thing, that there's 149 people still looking for a house.
100%, exactly,
Smart analogy.
exactly.
Yeah, and when you spread that across, you know, the increase of listings, and I'm sure there's multiples and regions and needs and things like that, again, it brings us back to the supply and demand, right, issue of there's 150 people trying to buy
150
5
houses.
houses.
We were talking about this, is the interest rate that keeps dropping.
Yeah.
Right? Like, I'll tell you, I predicted wrong in that sense. I didn't think it was going to keep going down. I really didn't. I think that, and it did. And you're saying you don't think it may not be done.
Well, there's not much more room to go, but it could.
But it
go
may
down
not
a
be
little
done.
bit more. Yeah, it might not be done. for
Might not be
sure.
done. So you combine that,
Yeah.
you know, the 149 people with that kind of incentive and
You know,
everybody
we're
saying
in
now's the time.
we're in a very interesting time, right? When you see interest rates below 2%, you know, affordability, like regardless of prices, like let's talk affordability for a minute. Affordability is low, right? You know, people are able to manage these properties. You're able to buy for $900,000 and afford the mortgage payment on a 1.79% mortgage for the next 5 years.
And even if you can't afford it, Shubha, that's for the owner user, right? The reason I think that our market, you know, will maintain here and can't really suffer a huge loss is because there is so much money in Toronto, right? So if that house drops, okay, so it's $1 million house, and now I call you and I say, Shubha, get it for 800,000, and you're thinking, I'm going to borrow money at 1.8. Okay,
Done.
you know, I've got a little bit of money saved up. I'm going to put my money there. So you know, there's always that money sitting on the sidelines. And what's interesting is, and I think I mentioned this during the last podcast, 3 people contacted me during COVID, and you know what they all said? Taz, if there's any opportunities,
Let me know.
let me know.
Yeah.
Because they were thinking, okay, if
Steve, can you
know,
check
if it
and
hits the
see
fan,
if Tass mentioned that in
Yes,
the
I
last
did, of
podcast?
course. I have the memory of an elephant.
About
Steve remembers.
Yeah, I remember you mentioned that. You know what, guys? Listen to this
Because
one.
Shubha watched the entire
I
thing,
watched
the
it.
entire
I know you
podcast, he
mentioned it.
remembers.
The whole video.
It was the June edition. He said it. He said it. June
But
podcast.
you get my point there, right?
But here's a
Shubha?
good one for you, and you guys might even be surprised hearing this. Anthony, you've been in the business for a long time. You know, I had a client purchased a rental property in Toronto, cash flow neutral. Cash flow neutral in
Yeah.
Toronto
That's amazing.
on an investment property.
So
Go
I,
figure.
there
Right?
are
When's the
other-
last time you heard that? Right? Couple $100 shortfall at least
Is normal.
is normal.
I've been on the world will turn. I'm really saying that you got to look at school. I think the only thing that right now you look at the interest rate, you look at the ability to persuade an investor to invest right now is not that difficult. It isn't. So the only thing that is going to slow anybody down right now, everybody's kind of on the fence a little bit, especially looking at the income properties, is going to be, is the school get shut down? Is there a second wave?
Yep.
We know, listen, it's flu season. That's why I find it funny when they talk about the second wave. It's flu season. But is the economy going to shut down?
Yeah.
Are they going to just say, it's okay, and keep moving? And if they keep moving, I actually may even go against your prediction and say, I don't know that it's actually going to go down. I think it may stay even keel. Because you've got all these people, as you said, that we talk about, there's a lot of money in Toronto. And they're sitting there, and can you convince an investor at under 2%? Yeah, you can. Right?
Yeah.
Like the conversations that I've had with high net worth individuals, simply, when are you going to get money at this? When are you going to get it? If you wanted to, for your business, if somebody said, I will lend you money at 2%, what would you do? Oh, I'd take the money.
I've got all kinds of money I've borrowed. I don't know what to do with it.
We take donations, Paul.
Right here. right here.
But it's true, right?
Yeah.
When you look at money like that, and I guess that also keeps the economy going and,
Yes.
and keep things rolling, right? Because it's the time to do those things and to build the infrastructure and add machinery, and it's an opportunity to do it.
Well, and I think it's the time now for professionals to shine. And during COVID, we as a company saw an opportunity because we put our foot on the gas. And you look at this. Shubha, help me with this. 9 months ago, what was the interest rate? 3.69?
What was 9 months ago?
Well, you got to think about it. You got to think at the beginning of this year.
Yeah.
The beginning.
Most
Sub
importantly,
three.
in 1989, 5-year mortgage rate 11 3/4.
11 3/4.
Right. That's what we had. We had for years 11 3/4 5-year mortgage rate.
I remember, I remember when I got my first mortgage at 5.4, and I was celebrating because it dropped from 7%. But then the reason I'm talking about 9 months ago is we dropped almost 2 points in 9 months, right? And all you got to do is remind
18 months. We were sub 3, 9 months.
We're mid threes.
Sub 3.
Sub threes? Yeah, 3.39. So even so.
No, below 3.
No, we weren't. Not at the beginning
January,
of this year.
Yeah, for sure. In January, we were doing 2.89, 2.99.
If you have any questions, okay, you can
I understand your
Yeah.
But I get your point.
My point. So I'm going
point
to
is
challenge
still
that. I'm going off record. I got to look at some of our
It's so
mortgages
cheap.
Point is still
Right?
Kendall, you're
But-
so right.
but
It's
the-
just so cheap.
So I guess my point is that this conversation now, as a professional, real estate professional, a barber, a mortgage advisor, a mortgage broker, a mortgage
Underbelly.
agent, right?
Dark underbelly?
Dark
These are now, when you're having
Dark
these conversations with investors, there's something to actually talk about. And really, the idea is, and we know this from business, you want to get there. I was talking with one of my colleagues today, and I'm like, it's a unique time because you can actually get to the front of the line again. You could actually get to the front of the line again. So where people were saying, and you've heard investors that maybe wanted to get in, and they were like, thank you.
Drink that. We need
Wanted
try
to get
the
in, they were
last
like,
wine.
I don't know, maybe things are too high now. The opportunity is now going to represent itself again, which may stimulate that 5% drop. Maybe it's only a 3% drop or 2%, or maybe it stays even keel. But I think the only thing that's going to really impact it is what I'm really interested to see what happens with school, because that's the fear.
Yeah, but I think that also we're in a better position to deal with it.
Yes.
Right?
Yeah.
We're in
So
very good
we've been through it. We know what it's about. What do you got to do? So we're in a position to deal with it. So I think
Yes.
that makes it less of a concern.
Yeah.
Right?
We've seen what other countries have done throughout their second wave. We have more substance.
No, and I'm not. I'm also looking at, but you got to look at the human behavior. You look at the fact that you just had a record. You had a record August. You had a record August because everybody looked at school differently,
Right.
right? Like everybody didn't look at school the same way they did. Everybody doesn't look at school the same way they did in the sense of taking their kids out of school. That school now becomes, they're going back to school. They're going back at some time. So I think even the psychology of school has changed in the sense of it is not everything stops, and we're not looking at everything because we got to prepare for school. We're going to go shopping for houses. All right? So it's interesting. We'll see. This time is interesting.
I'm not as concerned about the possible second wave. I think that the economics of what is going to come out of the learning experience is a bigger concern to me, right? Meaning companies now are all viewing for possibly the first time what it's like to have this work from home atmosphere.
Yes.
And one person I was just speaking to, they're in the process now, and this is a global company, right? So in Toronto is their guinea pig location. So they're going back with 30% occupancy,
Yep.
right, with the employees. Sorry, up to 30%. So this is what was really interesting. This is a big company. They surveyed everybody. 78% of their employees said they want to continue working from home,
Right.
which was really interesting. Because I don't think that that's the general rule across the board.
Yeah.
I think it's not nearly that high. This particular company, that's what their survey said. But what's interesting is what they're starting to realize is not only do they not need the 3 floors of this building. He said they've already talked about going down to 1 floor. But he said the foolish part, in a way, is all the employees that are saying, oh yeah, we all want to stay home and work. He says that's almost prompting the company to think more of, okay, those are even more people that we can lay off because they're going to be the whole work from home scenario that they view it as a possible, elimination of jobs, right? So anyways, I think that's what's shifting right now, Kendall, is I think a lot of companies are going to have a lot less space, and I think also they will discover that they can possibly do work with less people.
But
right?
this is, and then that's the next 6 months. So it's interesting you bring that up, because I've had this conversation too, that productivity from home, technology has not caught up with productivity from home. And what do I mean by that? There are companies that are equipped for that, where they can monitor.
Yeah.
Are you on screen? Are you doing the work that you need to do? We're going to see a massive decline in productivity. And I'll tell you, simple example, we were moving our business accounts from phones, from TELUS. And I had to wait 2 weeks for a manager to call me back because he was just too busy. Right? But that was okay until it's not. Right? Because they have him governing his own time. So he's now decided from working from home that I really report to myself, and I'm going to tell you what I can do in a day. And when productivity crashes, we're going to see a real problem, because technology has not. Shopify closed all their doors. Shopify, everybody can work from home. That's going to be a challenge when, and me coming from my corporate background at Bell, major problem is most people can't work from home. They really can't self-govern. It's a really difficult thing to do. Right, so that's another. It's an interesting world we're getting into, because
the COVID excuse is going to run thin eventually, right? Like what you were saying about the guy from TELUS, right? I think people are going to run out of, like you're not going to be able to use COVID as the excuse. Oh, it's COVID.
Well, I'm going to tell you something scary. So I have a friend in HR at Rogers, and I said, so how are you managing people with this whole COVID thing if they say they don't want to come in because they're sick? It's the honor system. Like, what do you mean? If they say they don't want to come in, they don't have to come in. And I remember being at Bell, and you couldn't just not come in. And if you didn't come in for an extended period of time, well, we needed a doctor's note.
Yeah.
We needed, if you were going to LTW, long-term wellness, you had to justify why you were going. And right now, the answer to one of the biggest companies in this country is the honor system. I don't feel well. I think I have COVID, so I need to stay home for 14 days. Okay.
You know what though, the one thing that COVID has taught us, and I'm a big believer in this personally, is the one thing that COVID has taught us, this pandemic has taught us, this was the moment. The sky was falling, right? COVID was everybody's worst dream. Like, the whole world is shut down, people are dying, people are sick, we don't know what's happening. And 6 months later, 6.5 months later, the one thing I think it's taught us is that we'll always figure out a way.
Yep.
Right? Whether it be through stimulus, whether it be through people binding together and making an impact. A lot of countries, we saw regular citizens becoming educators and teachers and helping, the children, right? Whether it be through, the economy bolstering. Who would have imagined in April that July was going to be the record month ever in real estate?
I think I predicted
and then
it.
followed by, other than TASIS, if you asked any rational person in April, they would have said, no, July was not going to be the best ever month in real estate.
But you know what? It's funny you say that, because Shubha and I actually argue about this. I don't agree with that statement at all.
But it's true.
It's actually not true. And it's not true because we sit on the side of fortune. Right? We do.
Kendall doesn't agree with it, but he's wrong.
Right?
Okay, please go ahead, Kendall.
Right? Because, think about it. We're sitting here and we've done well. I'm talking about my people that come from hospitality. They're decimated. They did not find a way. They are done.
They're white.
They lost everything. I have friends that lost everything.
That's sad.
They have no support. They have no help. So you're saying that, and I'm not calling you out in a bad sense, but it's easy to say everything works out when you're on the side of working out.
I don't say everything works out. I don't say everything
We find a
works
way.
out.
We didn't
I
find a
say
way.
we found a way. No, we found a way.
Some
We
people found a way.
Some people found a way.
Some people
That's
did
it.
not.
Yeah.
Because some people, there was no way.
No,
was
but
no way.
no, but
It
listen,
really hurt.
but there was a way. Did those people, when we say they lost everything, like, they still have their lives. They still have their health. They still have, a
Sure,
roof over their
you're
head.
saying
They
that
still
because you
food,
have
right?
income. You make money. It is like saying, and we've argued about this because he's like, why won't people stay home?
I can tell.
Yes, right? So you can stay home and you don't have to go to work to make money when you can pay your mortgage, when you can feed your kids, when you get money. There are people
That don't have that option.
don't have that option.
Yeah.
And they could not find a way. And they did not get the support and the help they needed.
Yeah.
And we were fortunate to be in a business that everybody said the sky was falling. It's going to be over. Real estate's done. And it didn't happen for us, right? So I'm very careful when I make,
No,
as
I
much as I
appreciate
make
that.
other bold statements
No, I appreciate
about
that.
certain people
I
who make
appreciate
statements.
that.
But
So this is the wrong time to introduce the fourth wine.
all right.
And now we're going to try
Some wine.
the Sassicaia. Okay?
Oh!
The $8,000 bottle.
Is that the big glass?
This is the your glass on the right, your glass on the right. So give just go with the nose on this one.
Okay.
Shouldn't we have started this
Your
one
left.
first?
No, I'm always
There's a
serving
plan?
wines in the order that you should be trying them.
Okay.
Shuba.
I don't know the lingo, but I know a good wine. And as soon as I smelled that and tasted that, Paul, I kind of looked over at you and thought, wow.
Yes.
Yeah. So I wanna read
Very
you
good.
what Tass wrote about this wine.
Barnyard.
No. This is his
Start-
assessment
start
of this
with
wine.
the
I thought he
nose.
wrote a poem.
I can after.
I love my
It is
wine.
rich and concentrated. This red features black currant, blackberry, violet, mineral and spice flavor.
Wow.
Dense yet lively,
There you go.
structured, flat, impeccably balanced, with vibrant acidity driving the long fruit-filled aftertaste. The oak is beautifully integrated. Cabernet Sauvignon and Cabernet Franc, superb.
Did you say Tass wrote this?
This is Tass. This
With
is,
a- with an
assessment
exclamation mark
of
on
this,
the end.
of this wine.
Was this 3 bottles later?
No. He wrote that before it was produced. Right.
No, you're joking.
In May?
Well said, Tad.
That is so easy
Very good,
drinking,
very
Paul.
good.
Like,
So
like,
just,
like that's dangerous in
Yeah, I was
terms
about
of
to say
how
this is
easy drinking
I was
it
actually
is.
going to say a bit fruitier than the other wines. Can I
Okay.
say that or no?
Yeah, you can say that. Yeah, and this is
I mean, it's all fruit, Kendall. It's great.
Well, yeah, thank you.
this wine
So I'm
is
trying to be a little bit distinguished.
is what's called a super Tuscan. So Tuscany is and Italy is known for their Sangiovese, their Nebbiolo, their Barolos, and somebody decided that we're going to take the Bordeaux varieties, which is Cabernet Sauvignon, with a little bit of Cabernet Franc mixed in, and we're going to make those varieties in Italy. And Buglieri is
Mid-Southern?
I don't know where. You don't know where that is?
Buglieri?
I probably don't say
You're
it
not
right.
saying it.
I'm not the Italian.
said it right.
San Guido the Buglieri is the. No, I'm not saying it right. All right, I apologize.
Anthony's confused.
My Italian
It's
is
in
off.
Italy.
Yeah, it's in Italy, and this is what's called a super Tuscan. So it's a Cabernet dominant wine, and this is a cult wine that if you were to try to buy it at auction would be, marked up. You guys finish your glasses and then try a little bit of this. Try a little bit of this. And this wine is rated 98 out of 100. So it's a 2015, and it is a wine that if you took this to Auberge de Pommier, they would be very, very impressed.
They,
Wow.
they might comp your dinner if you offered them a glass
Yeah.
of the wine.
A thimble.
And you can
And I would have to quote Tass's prediction on it.
Yeah,
though.
yeah.
That was very, very, very well written. I
Yes,
must say.
It
was.
eloquently
Yeah,
written.
yes.
I would
Distinguished.
say. Yeah, very good.
This is very nice.
So, on that note, we've tried the fourth wine.
Yes.
Steve, you're ready? Okay, let me give you a taste. Let's get Steve's opinion on the fourth
boy.
wine. And
I thought you'd use a shot glass.
he usually has his tasting symbol that he uses, and he.
Yeah.
And all of these wines, guys, go much better with food. They're not really, wine to be had without a meal.
Spaghetti bolognese.
Excellent. Now this last one though is not going to go with the bolognese. This is going to be a ribeye steak,
Yeah.
right? And that's going to go with that. What did you think of that last one, Shubha?
I thought it was really good.
Yeah.
It was really good.
That's excellent.
15. I also have the 2016, which was in the top 10 Wine Spectator wines of the year, and it got 99 in 2016.
Wow.
That's not ready to
You
drink
might
yet.
have mixed them up. I think this might be the 2016.
No, it is the 2015 for sure. Steve, what did you
2016 's
think
not
My
of
ready
taste
to
buds are rarely
of
off.
the Sassicaia?
Second task assessment.
There you go.
Yeah. No, that was very nice.
Do you
It is very nice.
taste the black currant undertones
Absolutely.
and the
Fruit-
raspberry
fruitiness.
overtones?
Fruitiness.
I would have actually flipped that.
Fruitiness.
I thought it was more of a raspberry undertone with the blackberry overtone.
Yeah, but you don't know what you're talking
It might
about.
be the chocolatey appearance that's throwing you off.
That might be.
Yeah.
There you go. There you go.
I can tell you there are no stems in this.
There's no.
There's no
You're right.
stems.
That's right. It's all hand picked and
All hand-picked.
Yeah.
That's a very nice wine.
Okay, on that note, we are going to sign off on our 20th podcast. I think we have enough for our next two. We have 20 and 21 here.
Yeah.
2022.
Okay, it's all good.
You went to a second introduction.
All good. So thank you very much for watching. Hope you enjoyed the expert opinions of our CLC mortgage reps. Thank you very much to
Thank
Shubha
you,
and
Paul.
Kendall.
Thank
we
you.
really
Thank you for
appreciate
having
you
us.
guys being on here.
Our
And we'll look forward to having you again in the near future.
Absolutely.
So thanks very
Absolutely.
much. I'm Paul Barron, broker of record, signing off. And
Tasso Giannakakis, wine expert and partner at Century 21 Leading Edge, signing off.
predictor of the future.
That's
Yes,
true.
and predictor
That
of
is
the
true.
future.
I'm Anthony Bungaro, just a nice guy. Go with the flow. But thank you very much. It was good to have you guys. It was
Thank you.
Such
Thank
a
you.
pleasure.
Thank you
for having
both.
us. Yeah.
Okay, thank you,
Cheers.
gentlemen.
Thank you very much, guys. Just we need you to sign off. They
Oh.
just we'd like you to give a toast and.
Cheers. Thank you for having us. This was awesome, especially since we've been separated for quite some time. So very nice.
That's
And
true. I guess we haven't seen each other for quite
have
a
not.
while.
Haven't seen
Quite a
each
while.
other.
Not.
Great conversation. Obviously, great company.
Great.
I'm a fan of the red grape variety.
Even
I
though it's
have
all
that
white.
here.
Thanks, Shubha. Thanks,
all
guys.
good, guys.
Take
Thank
care.
you.
Thanks, Vendetta.